Good evening, Ira Epstein, and here we are with your metal market wrap-up, and this wrap-up is for Wednesday, the 8th of June already, and it is 2022, June 8th, 2022, about 5:25 p.m. So in the marketplace, you've got to ask yourself in one thing. Here we are with rates still climbing. We're around 3.04 in the 10-year note. How high is it going to go? My own personal guess is somewhere between, obviously, where you're at and 3.75. I don't think it'll go beyond then in just looking at everything that I'm seeing and what I'm reading, and I read like mad. The market has done most of the Fed's work in the long end. Mortgages, they can go higher. Could they get to 6%? Potentially, but that's not the easiest move to get up to. You won't have any demand for mortgages at that rate anyways. You don't see it now. Where the Fed's impact's going to be is in the short term, and I'm talking the one-year notes, the twos, that part of the curve yield is going to lift against the longer term is my guess as to what's going to happen here. And we've talked about that before, inversions, which you haven't really gone back to doing, but it probably could. Not a surprise, and it'll weigh on the market. So what does it mean for the metals? Do they ever come alive and just say, hey, the worst is behind us on interest rates? Could be worldwide eventually. And yes, there's slowdowns happening, but the demand for these goods, because the giant is awoken, and that is China, that will offset it. And I think that's part of the argument, yes. I continue to believe strongly that President Xi is going to change his ways. And the reason is he won't change it in front of the big Politburo meeting. Well, I don't know what they exactly call the big communist meeting in China. I forgot the name of it. But there's a huge one coming up where all the heads of the Communist Party come in. And after that, that will be where I think, very subtly, you're going to see changes. I think you're seeing them in Beijing. Did you hear about full lockdowns in Beijing the way they did them in Shanghai? I didn't. If they are doing them, they're much quieter. So they're already seeing the impact of this nonsense of COVID zero tolerance. It doesn't work. It's draconian. It's borders on stupid. I hate to say that, but that's what I would call it. I'm not calling President Xi stupid, so don't write me about that. The policy is stupid, and if you take it any other way, I apologize ahead of time because it's not what I'm saying. So in saying that, I think that they will realize the idea was there, it just doesn't work. You got to get with Western medicine, vaccinate the people that need to be vaccinated. If you're going to lock in zones, you don't do a whole country at a time or whole cities of 25 million people. Enough said. So where are we in all these markets? Well, let's go over here. I hit the wrong button. We'll come to the first chart. I'm still learning my new toy. Look at how slim that is. Unbelievable how they do these now. If you look at the gold, we're still under the 18-week average. If the market's going to rally, that's the logical target. Getting back up to that neutral zone of 1901, if it's going to rally. Do I know if it's going to rally? Hey, folks, I don't know. I can tell you that this action, this sideways action, are you going to break out to the downside or upside? It's not going to stay here. So one of those two are going to happen. Option traders are probably going to do straddles, where they're going to bet that the market breaks out one way or the other. That's one way to look at it. The near-term trend turned up today. Now you have a pattern of higher lows and higher highs. Next thing, the market is holding the combination. When we got here and we got down to this, if you'll recall, let's see if I can do this because I know that I said it. There we go. I really am learning this thing fairly fast now. When we were looking at this right here, I said, are we going to get a kiss? Now, what do I mean by kiss? It's where you sort of scrape with the 18-day average, the 200-day average. You can see it do that. Didn't fall far behind it. And now the question is it trying to get back over it? You do see that, right? It just skirted over it at current price levels. That's what I call the kiss. If the market's going to be good, the pros are going to buy it, and I think they did buy today in this area right here of the combination of those two. I think they'll put stops under 1830, 8.5, and believe it or not, if that were taken out, I think they'd go short, looking for the market to drop even further. So where might it drop if it comes down? That would be the Bollinger Band. Where might it go if it takes off to the upside? The upper band at 1876.20. That's what I see in play now. And we got down enough where we're not overbought anymore. So momentum to get down had to be pointing down, but it's not falling apart. So the question is, what happens here? As I said, I'm expecting to see buying coming in, stops under that number to see if the market can get up higher. In terms of the gold-silver ratio, if we take a look at what's going on, this ratio is looking and making a challenge, the question price making a challenge of the 18-day moving average of closes, 843.90. And if that's happening, silver's gotten relatively weaker than gold. But there's more than that going on in silver. Look at how narrow the Bollinger Bands have gotten. I want you to think of it this way. This is a pipe now. Inside of the pipe is a spring. And we're looking at the spring winding itself up. It's going to break out of this one way or the other. It won't stay in this narrow band very long. It didn't do it back here, and this is a narrower band than that one. So when you get these real narrow bands, and you should go on your charts back and see when they narrow in like this, take a look at the action. So let's assume that silver goes to the upside, just for discussion's sake. Has to get through 2207, then start riding the Bollinger Band to do it to get up to these averages. Let's assume it tries the downside. There's no moving averages under the market. It's a cleaner path. Does that mean it'll happen? Not necessarily at all. The market's already stepped down from the 26 to the 22 level, found a home there. It's not that often that you go down, you make another level, and you're going to just keep breaking down. And in addition, I view the fact that China's back in the market for all kinds of goods, and silver's used in electronics galore, as we know. So that gives the market another form of demand. That's my own opinion. So I'm looking for ultimate resolution to the upside, not downside. But is it time to bet on it? No. Could I be clearer? In the copper market, you need to correct. The market got to the point where I think the pros came out of the market. I would not be surprised that you go back into the 18-day average to fight around. I know traders keep writing, well, this is China demand. No, this was the China demand. This is the aftermath of it. You're a dollar late to whoever's writing those articles. Now, what I said yesterday holds true, in my opinion. You use the supplies and the ports and the storage facilities and all, and then you start placing your orders again for the additional supplies. But when you shut down these factories the way China did nationwide, not every one was shut. We know there were some open, but where were they sending? To the bigger factories? They were definitely closed in 31 cities. They have a zero tolerance policy. Remember that. Therefore, the whole supply chain's got to go to work. I see resistance 451 to 454, and no, I think the market is not a buy at current prices. In the platinum, this is the resistance, the support. It's everything at one time. The market got over the 100-day, fell back, and it's acting as support. Normally, it acts as more resistance than that. It didn't this time. This in silver would have to be on a different scale what has to happen. If it's going to break out to the upside, it's got to start pushing and hanging in on that Bollinger Band if it breaks out to the upside. One way or the other, that is a pattern that's got to happen for the upside. If it doesn't, you're going down. It's that simple. In the palladium market, you've now gotten down to where I think the bears are covering all their shorts. Walking away from the market, that's what I'd be doing. Going, okay, I know this is going to be catalytic converter time. We don't have to worry. The London Metal Exchange and the delivery of palladium that drove prices crazy on the Ukraine invasion, they solved that situation a long time ago. You do see that the London Metals Exchange is being sued for big bucks by groups of hedgers that got hurt because of their crazy policy on nickel. You remember that fiasco? That's going on. You're caught again in this sideways action. Could you go lower? Sure. Are the odds there? No. The odds are you're oversold, the pros are coming out of shorts, and you walk away. It's been a heck of a drop. It could go lower. The reason it would go lower is not demand for the metal. I don't think that's going to be the case once car factories pick up again. In the dollar index, where do you think the resistance is? It's right where I told you. That 18-day average. Do you agree it went there and it just sort of stopped at this point? Now, I don't expect the dollar to move very big until Friday. It's going to get CPI numbers. They're going to be 7%. They're going to be 8%. Is the monthly number going to be 0.5%, half a percentage point increase, 0.6? It's going to be a hot number. And how the market reacts to it, I don't want to guess ahead of time. I'll let somebody else do it. In addition, you've got the European Central Bank monetary policy meeting in the morning. So we're going to wake up, we're going to get the statement, and then Ms. Lagarde will come on about 7:30 or so and take a lot of questions, answer what's the policy. Now, she's under a lot of pressure. A lot of the members do want to go to a half-point increase. We're seeing that from central banks all over the world. She wants to go quarter point. We'll see, does she hold the sway? Remember, just like in the U.S., Mr. Powell listens to all the other members. He doesn't have to pay attention. He's the head cat. She is the head cat there. Same thing. So they will decide just what's going to be on. You know, one of the things I want to always remind you about is what we offer in our brokerage, because today, let's talk about natural gas. Did you see what happened? The market fell 10% out in left field. If you don't know what's going on, and I wasn't even by the markets, I had an appointment away today, got a question from one of my clients. I didn't know about it. My brokers all did. And what happened? There was a fire in Texas at one of our 7 LNG ports. Well, do you get calls from your broker saying that that's going to be how the market is? What do? You know, because not everybody places their order. Not everybody watches the market intraday for you. You got to see what comes out. What about market reports? You want a quick call. Hey, what is that report? What's the market reaction to it? What's going on? You think you can do it all, but I know that most of you cannot. It's nice to think I'll do that, but it's also nice, and there's a reason you have brokers all over. Do you ever wonder about the people you watch on Bloomberg, the people you're watching on CNBC, Fox? These guys are the head research people for their league of brokers. And those brokers are on the phone with their clients, and they're explaining everything I'm talking about. So how do you find out more information on this? It's so simple. Just give us a call, 866-973-2077. Simple enough, 866-973-2077. I think you'll find the conversation worth your while. Commissions, they're not going to be expensive. And maybe, just maybe, it helps you with your ideas in the marketplace. I'm Ira Epstein. You have a great trading day, and I'll see you tomorrow with our market wrap-up.